is if you're not losing anything on price,
Yeah.
then maybe you've got some upward room that you're not realising.
I think often people are too slow to put prices up.
A lot of business owners don't actually know what pricing their sales guys are quoting.
Well, I think there's things like terms, like how long was the contract duration,
Yeah.
scope, clearly.
Almost without exception, customers are very understanding of the fact that you need to earn a fair return for your effort.
So you know how we sometimes talk about animals and things, like you talk about your cat, what your cat brought in.
Yeah, and you talk about your bees.
Talk about bees. Well, this week we have a couple of pigeons that often come in our garden. Not a big fan of pigeons.
I'm definitely not a big fan of pigeons.
Well, I'm not really a fan at all, but
Flying rats.
yeah. But I was just going out onto the patio and I heard this almighty bang, and one of them had flown into the window.
Ah.
So I stood by it whilst it breathed its last.
Oh, it actually killed itself?
It killed itself, yeah, broke its neck.
Wow.
And so dispatched of it. Thankfully, I didn't have to properly dispatch
It
of
dispatched
it.
itself.
Dispatched itself, and then I removed it from the premises.
Yeah.
But then the other pigeon's just knocking about, it's just hanging around. It doesn't know what to do. Now, I looked it up. Well, Mrs. Buckle looked it up. She told me about it. And but they because they mate for life, they have a sort of oxytocin. You know how we get like an oxytocin response when you're next to someone you like.
Right.
So
is it oxytocin?
Oxytocin, that's one, whatever it is. And so they have pigeons have this, right?
Right.
And it lasts for about 3 or 4 months.
Oh,
so this
really?
pigeon is just kicking around in the garden now.
Pining.
Yeah. It is. It hangs around where the other pigeon died. So I don't know if there's some sort of weird
I didn't
magnetic
realise that
chemical
pigeons
thing.
mated for life.
It literally will just wander around the garden with a twig in its mouth, looking depressed,
Oh no.
just hanging around.
As
I feel sorry.
As it looked depressed, like
well, just kind of heads
droopy.
like it can't be bothered. Before they were quite industrious. All day long they'd be building this nest, and now it's just kicking his heels, just wandering around the garden. I think it's the he, it could be the she. Don't know. Haven't got that
Not moved
involved. But and then sometimes you just come home and it's just a solitary pigeon just sitting on the roof on his own. I now feel really sorry for this pigeon.
Wow, you got an emotional attachment to
a
widow
I
pigeon.
think because I witnessed it. I think because I saw
You heard the bang.
the wing print is still on the window.
Ah.
I thought I'd cleaned it off, but
Yeah,
I looked
I've seen
the
the
other
wing
day.
prints on windows before. I can't hear a story about birds flying into windows without thinking of that design chap that we used to use, who told us the name for the little stickers you put on windows to stop birds flying through them, called manifestations.
Oh, okay.
And you do them in your company logo sometimes, or some geometric
Yeah, right.
pattern, and
And they can see.
and that's just so that it gives it some obviousness, so
Yeah.
the bird doesn't fly through it. And as soon as you said bird through the window, the word manifestations popped into my head.
So maybe I should put the Buckle family crest on the,
Yes,
window.
if you'd done that, yeah, then you wouldn't have a morning pigeon.
Exactly. I have to
Moping
have to
around
come
your
up with a slogan now, whatever that would be.
So I wonder if there's anything you can do to help this wretched animal. Dating agency for pigeons.
Well, apparently they get over it in about 3 months and they go and find someone else.
Right.
So I thought, well,
So nature says 3 months is about the right time. That seems a bit short.
it depends on the bird. So different birds have different lengths. So I think if you've got pigeons are about 3 to 4 months, some go for ages, like penguins, don't they? They kind of
That's it.
that's it.
One for life, and that's a lot.
just-
I wonder
they're
if it's
off.
done as a percentage of the lifespan and what that turns into in what's the acceptable time in human years. So a pigeon can't last more than, I don't know, 3, 4, 5 years or something. I have no idea.
Yeah, maybe. So like a year or something, isn't it?
So,
maybe a year,
something like that.
2, 3,
Yeah.
2 or 3 years.
There's a PhD in there.
But yeah, it's
The appropriate morning period for different
yeah,
species.
based on biological markers for
Yeah.
morning.
Well, still on the theme, my mother's been asking, how's the honey from the hive project coming on? She's waiting to buy some honey from
Buy
you.
some. Oh well, honey from the hive.
Has it been shelved as an idea?
It's not. I'm not allowed to put a hive in the garden.
No. But you can use the place where the bees all live up at the Beekeeper Association.
Yeah, I could do. I probably just need to go up there and volunteer.
I've started making cheese, which isn't quite the same.
Mm.
Amazing number of things you can make from milk. Butter, yogurt, cheese, and all that stuff. So I shall bring some samples into the office.
Chocolate milk.
Chocolate milk, yeah. Dairy milk. So that's making me hungry, so I think we better do a podcast quick. This episode is sponsored by GoCardless. Running a business can mean spending far too much time just trying to get paid. GoCardless automates bank payments so you can collect what you're owed on time without chasing. Over 100,000 businesses worldwide already trust them. Businesses typically spend 59% less time managing payments and get paid 47% faster. Better cash flow, less admin, and more time to grow. If getting paid is taking up more time than it should, fix it with GoCardless. Head to gocardless.com/podcast to claim 90 days fee-free. T's and C's apply. Hello and welcome to another episode of the SME Growth Podcast from Wellmeadow, where every week we try and come up with something useful or interesting for owners and managers of SMEs, and to be frank, other sized companies as well. You don't have to just be SMEs. In fact, we're working a lot more with much bigger group of companies these days,
This
aren't
is
we?
true. We are
Private equity
a
backed
broad
groups.
church.
We are a broad church. Is that the same topic? We're also a broad church. So here we are again for another episode, and we are on episode 182. Now, I could throw you under the bus here and ask you what the previous 3 episodes were, but I've got them written down and you haven't. Because you just rushed in from another series of meetings. So I had a chance to look them up. So this is normally your slot. I feel as if I'm cheating now.
Shall I see if I can...
See if you can guess them.
Oh, gosh,
So
this isn't
182.
very good.
So 181...
Oh, I'm falling at the first fence.
Yeah, shall I give you a clue?
Yeah.
This one is about advocates. The steps to building advocates and the referral machine and making customers, loyal customers into those that refer work to you. Okay, so that was last week.
Okay.
You didn't even remember doing that. You were asleep for that,
I
weren't
don't remember doing that one.
you? Okay, the one
No.
before that then.
So that 180. So 180.
180. You remember that one?
Gosh.
It was to do with SMEs.
Funny that, given the name of the podcast.
I know.
Was that the Elon one?
No, that was 4 ago. We're not even going to list
wow.
him. He's gone.
He's gone.
Oh, by the way, the experiment didn't work. Putting
No.
his name in the title did haw
Mm.
for the average number of viewings and listenings. It was the same. SME squeeze.
Oh, that was it.
Cost
On the
pressures up,
cost pressures.
expectations
Yeah.
higher, blah, blah, blah. That was SME squeeze.
Yeah.
So if you didn't remember the previous
Gosh,
two,
I-
the chance of you remembering 3
Yeah.
ago, I mean, what'd you have for breakfast? Haven't got a clue. I
Who
know
am I? Why am I here?
Who's the name of the Prime Minister? That's actually quite a hard one to
Well, yeah,
answer.
exactly.
What day of the week is it? So episode 179 was company away days.
Oh, well, okay.
What are they really
Okay.
for and are they worth it and blah, blah, blah. So
Okay.
that's been interesting ones. So today, though, 182, episode 182, we're going to talk about pricing.
Mm.
And the challenge to you as SMEs, and in fact to all companies, is you're not charging enough. Okay, now we've had a period, not so much this year and last year, but we had a period a few years ago of quite high inflation. And it woke everybody up again to the thought that, oh my goodness, we better put our prices up. But we've got a much more chronic problem than that. And there'll be some examples we talk through in a minute, which are good signs that you're probably not charging enough. But we still tend to default to a fear that customers don't value what we do enough, so we try and do some sort of
Yeah.
cost plus some reasonable percentage thing, and we always undercook the costs and you don't make enough money. So you need to get a fair return. I'm not talking here about profiteering. We're not trying to do anything that wouldn't be ethical or good business practice, but we do want to save companies, from their own worst decisions.
Get paid for the value you add.
Yeah.
I'm slightly distracted now because we said pricing. I thought Price is Right, game show. For some reason, Jim Bowen, bully.
That's not Price is Right.
I know, but I made the
You
mental
made a
leap.
jump.
I made a jump.
A
It was
jump
like
jump.
a mallet's mallet jump.
Who did the Price is Right? I think that was probably Bruce Forsyth or Larry Grayson, all before
Maybe.
your time. You don't remember
Yeah, I
these people.
don't know.
Yeah, anyway.
Price is Right.
So then you jumped over to Bullseye.
Bullseye,
Jim Bowen.
game show, Jim Bowen. And probably because of the 182, 180
Oh, that would
thing
have
as
got
well.
you going on that.
So that
yeah.
got me going.
Look what you could have won.
If anybody,
Boss Pharaoh.
speedboat or something. Yeah.
They should bring that back, shouldn't they? Especially with the
They
resurgence.
did bring it back, I think.
Well, I'm obviously not watching the right
But he was
channels.
very politically incorrect, wasn't he? He was pretty.
He was of his
cutting.
time.
He was of his time
He was of his
with
time.
the commentary to some of the people. But anyway, that's not what we're here to talk about.
No,
But
we're
just
not.
mentally.
Anyway, but I'm glad I've now got an explanation for why I had that glazed
Yeah, so
look
glazed
on you.
look. I was like thinking,
As I
yeah.
was asking you about pricing, you were thinking about the Price
I'm
is
just
Right.
seeing a couple of people just throwing darts at a
Yeah,
board,
which wasn't even
seeing
the
if
Price
they
is
could
Right.
win
I
a
know.
prize.
It's crazy how your mind works. No wonder you're good at all the creative stuff around here.
Very non-linear.
Sometimes so creative it goes off the page. So what's your thoughts on pricing then? Where do, in your experience of the companies you work with and stuff, you got any horror stories or good examples of where you've seen this go wrong?
I think often people are too slow to put prices up.
Mm-hmm.
And what drives, is that probably fear that drives it?
Yeah. Do you think companies take enough notice of their data? And I know everyone's going to say, oh, here we go, they're going to talk about HubSpot again. But measuring win rates, segmenting your win rates by different things, which could include your target margin in the price or the segment or who the competition was.
I think it depends. I mean, I think if I went to legal, because that's where we did a big pricing, so I think a lot of the law firms we work with think they win 100% of what they get.
Right.
Partly because I think they're just really bad at measuring inquiries that come in.
They don't remember the ones
they
that
just
they didn't
remember the ones that come in. But I think we did some research with a firm we're working with, just benchmarking against other competitors, and found that the firm we're working with was probably 20 to 30% lower in terms of pricing. So we put the prices up.
Which they were nervous to do.
But they could do it selectively. So obviously, some of their prices have to be published on the website. So, but they didn't see any kind of drop in volume or anything like that.
No.
So,
well, we had an example ourselves a couple of years ago now, where we had a client down south, where they finished the main retainer that we were doing, which was quite sizable, as you know, and we'd obviously given them a good price, and it was quite old, so the prices were out of date a bit. And they asked us to carry on with just a nominal 5 hours a month type of support, and we priced that to lose it almost, didn't we?
Yeah.
We sort of doubled our price, our hourly rates for it, and they came back saying, "Yeah, that's fine. That's about the market rate that we've been quoted elsewhere." You think, blinking heck, we've just doubled that, and all we've done is reach the market rate.
Yeah.
So that was a wake-up call, wasn't it?
I think as well, there's just something that happened yesterday, actually. Somebody referred us to another client.
Keeping it nice and anonymous there.
Yeah. Somebody. But it was probably a year or so ago that I'd forwarded an email over with pricing rate cards and things like that in it. And that was the email that got forwarded over. It just got me thinking, actually, you've got to be a bit careful with some of your legacy pricing here. So I had to say, okay, that's great. Probably indicative, but things have changed and all this. But yeah, whether you should put expiry dates on some of the pricing if you do an annual pricing review, or just how long is this rate card valid for, so that you don't get held to pricing from 2023 or something like that.
Well, the other trick that companies tend to pull is to have a price list where all the prices are way above what they ever actually charge, and then a rather complex discount structure where different people get different discounts. Happens a lot with resellers, doesn't it? But
or hotels and things with their rack rates.
The rack rate, yeah.
Didn't you do something on that years ago?
Gosh, that was a company really over in Belfast.
Yeah.
I remember giving a talk at a pricing conference down in London. Gosh, how long ago would that have been? 10, 15 years ago. We'd done some work, hadn't we, analysing the supply and demand curves, the propensity to consume and all that sort of stuff. And we'd come up with a reasonably interesting formula to how to do what nowadays is known as dynamic pricing, after Oasis and others playing around with it. Yeah. But it's especially well-developed science in airlines, as you can imagine, because the volumes,
yield management stuff,
all that stuff. But it wasn't being used quite as much for hotels and theatre seats and stuff like that at the time. So yeah, that was an interesting time. We got quite deep into the whole pricing thing. But I think the problem we find today isn't certainly not so much around the business to consumer side, business to business, and manufacturers or service industries, where they often the warning signs that someone's got this wrong are, it could be that you're winning all your work. And I challenged you just before this podcast started, when did we last lose a job on price? And it made us think.
Yeah.
Right? I'm sure we could come up with one.
Yeah,
there's one or two I think I could think of around the board support side maybe or something, but that could just be that it wasn't ICP. Yeah. Maybe your qualifying processes.
That was probably the last one, actually, the board support for the guys up in Liverpool.
That's the one. Yeah, and there may be others if we can think about it, but generally speaking, if you're not losing some, you've got to work out what your own number is, but do you want to lose 10% of your quotes on price, or I don't know, whatever it is, but have a number in mind. The point is, if you're not losing anything on price,
Yeah.
then maybe you've got some upward room that you're not realizing. That's one. And the other one is if you're just very busy but not profitable.
Yeah.
I mean, sure enough, that's a sign, isn't it? You clearly, if you're busy, you should be at maximum profitability. You've got maximum utilization. Everybody's got no unrecovered costs. All your overheads are being absorbed. And yet if you're still not making good money, let alone just some, then you can't be charging enough.
Well, and that's when you end up in the vicious circle, isn't it? Because you start chasing your tail.
Well, the problem I get challenged with when I point that out to companies in this situation is, well, it's a market price. We can't charge more than we're charging. Therefore, we're just doomed to be in this doom loop forever. Well, if that's true, you've got to change your strategy somehow, and however quickly you can, get out of that sector or do some product development to change what you're selling to that sector. You can't just accept it as market prices are destined to make us lose money forever. You'd be a fool to yourself if you accept that one. So busy but not profitable, and not losing work on price. Two big ones for that. Clearly, you could do your analysis you talked about with a law firm. Yeah. Bit of a survey.
Bit of benchmark.
Ask around. And the other thing is just test it. Try it. Maybe do this in an isolated, protected way. So choose a segment that doesn't relate to others, or a product range, or something where you can do it in a way that doesn't read across.
Yeah.
But just put your prices up by, not a trivial amount, but something meaningful. 20%, say.
Yeah.
And see what you come up with. See what responses you get. And where we've tried that in the past around certain niche areas and products, we've been surprised. You learn quite a lot about what people value.
Yeah, I think that's it as well. I think it's about you've still got to back it up with something as well, haven't you? You can't just have the price increases for. I think there's so much around price increases, I guess, around supermarkets and stuff like that. We're all seeing, petrol, for example.
Yeah, crazy. Yeah.
Massive price increase really quickly. Oil comes down below conflict, still massive price increase. And everyone starts to say, well, where's the value? How does that work?
Yeah, it goes up quickly and it doesn't come down as quickly.
Which is just, I don't know, such a con. And I'm sure there's some kind
and
of
it
supply
seems to
chain
go up.
mumbo jumbo.
There's so much stuff in the supply chain on its way that hasn't incurred that extra cost, but the price goes up on that anyway. So bumper. And look at the profits that some of the companies are making now. So absolutely right. We're almost getting more used to the fact that prices do go up, and inflation is back notionally under control again. It's above the Bank of England target, isn't it? But it's still around about 3%. Yeah. So it's not at the 10, 11% it was when the Ukraine invasion happened, and we had that spike. But it's interesting to see people's acceptance of some of the price increases that you put through. Now, I thought it might be worth having a quick revision of the maths.
Quiz time.
Do you want to do the maths lesson, or shall I do the maths lesson?
You can do the maths lesson.
I've seen accountants do this.
I can't even remember what episode we did last week. So.
Okay. I want to give people a formula. There's unrelated to this. There's another great formula I think everybody in business should know, which is your break even. You knew I was going to say that, didn't you?
I was discussing this with the work experience girl that we had in who wanted to do finance. She was very good.
Yeah, good.
And so
name check there for our work. What was her name?
Layla.
Thank you very much, Layla.
No, Leia.
Leia.
Sorry, Princess Leia. It wasn't actually Princess Leia, but her name was Leia.
Right. Okay. Well, thank
it's
you.
It's the only other Leia that I know, really.
Yeah.
So.
I know Leia. Anyway, so you were talking about the break-even formula.
Well, she was interested in going into finance, so we talked about break-even and other things, profit and loss balance sheet, that type of thing. I think we did an episode on that. Finance for non-financial managers,
we should have that list that
we should have that list that Meg prepared.
All the previous episodes.
Meg goes away on holiday, and it all goes to
We're
pot.
all to see, aren't we? You haven't got the previous episodes. You can't remember what you had for breakfast.
Gosh, about
the batteries are running
Jim
down
Bowen.
Jim Bowen. It's gone random. So, what is the break-even formula then?
It's your fixed cost divided by gross margin.
Fixed cost divided by gross margin %. So that's at least one that everyone should remember. The other one I really would like people to remember is, what is the increase in profits as a percentage compared to the increase in price? And the formula is the profit increase is the price increase divided by the gross margin.
Right.
So it's easy. These are a pair of formula. Yeah. Easy to remember because you divide both of them by the gross margin %. So if your gross margin is 20% and you have a price increase of 5%, then 5 divided by 20 is a quarter. So your profits will go up by a quarter, 25% increase. It's amazing. So it definitely works for lower gross margin. Now, don't just take the gross margin on the accounts as it is boldly presented, but you're trying to get the variable cost.
Yeah.
What's left after the variable cost. And it could be that some overheads are variable and some so-called cost of sales aren't so variable. So just be aware of that. But at a broad brush, if you're running, a 30% margin business and you increase your prices by 10%, you'll increase your profits by a third. Now, the same works in reverse, of course, with discounts. And this is one of the lessons that I wanted to draw out as well. A lot of business owners don't actually know what pricing their sales guys are quoting because they don't know what the discounts are, the discount structures that are being offered. And I did an interesting exercise probably about a year ago now when the AI connector first came out for HubSpot. Remember that? And they were bragging about it. It's all inside, built in now anyway, isn't it? But I got it to go through an entire client's portal and come up with all references to discount in any of the meetings because they've got all the meeting transcripts and AIs. And then to provide a summary for me of what different discount rules have been applied by different salespeople. And the chief executive office chair had no idea that there was this amount of it going on, but also the variety of different approaches people were taking. Right. And the problem you have is if you motivate your sales guys, compensate them by value of deal, not value of margin on the deal, then it's amazing how creative we can all be as humans. This is not a knock of salespeople, this is anybody. Yeah. If you get what you measure, right? So anyway, that works for discounts as much as it works for price increases. So remember, profit increase is price increase divided by margin. That's that one. So I just thought I'd run through a few examples. Yeah, I dug up a couple online, one McKinsey had done and that sort of thing. But there's one at a client, and if they're listening, they'll recognise this because we talked about it in the board meeting this week. But it's about a client that does a lot of bespoke work. And you could say we do the same, right? Because we don't churn out standard stuff. We're designing new things all the time. Yeah. And there's a hidden cost to doing bespoke work, which even if you're trying to reflect that in the price, you'll probably undercook. And this is, the difference between all Model T Fords being black and on a production line versus what you get, or even Teslas, to take a model example. You've got 4 colours to choose from and no options. That's pretty much it. And there's a real cost to deviating from that model. And lots of British manufacturers in particular have gone down this road of wanting to bespoke more and more because it's one of the more powerful ways of competing against Far East imports because you can be fleet of foot and change and use your engineering expertise and all that. But the problem we had here was that because they're quite seasonal anyway in terms of their business, if a lot of their bespoke demand comes out in their seasonal peak, they need extra skills for that. Yeah. You can't just take temps in that can operate machines according to instructions. You've got to be a craftsman, have a trade and all that. But that means for the off period, you're having to retain that labour. You can't afford to lose it because you'll need it again for next summer. And that is not accounted for in these extra costs. So it's a really tricky one, pricing, especially when people deviate from the norm. Yeah. Got to be very careful with that.
I used to do some work with double glazing manufacturer / sales organisation.
Rob.
Yeah, Rob. And every single time I would go in there, they would ask me what the gross margin was. So I asked what the break even was. But they had such a massive discounting structure and everything else. It was like, okay, so what's the mix of who's discounted what? Yeah. Because, you need to sort of understand that before.
So were there rules on who could discount what?
Oh, the worst. They got paid different commission depending on what the discount was.
Okay, so they tried to reflect that somehow.
But then they sort of paid the commission out a bit too early, right. Which is an interesting one on that, right? So what do? You've got something where you're selling a conservatory or something. Yeah. So sales guy sells it. Yep. Wants the commission straight away. I've done the deal, boss. Yeah. 25 grand conservatory or something.
Done my bit.
You've taken the deposit, say 10%. Yeah. That probably covers the commission. But then you've got to then pay out on the job and materials and everything, and you're not getting. So you're paying out your commissions. So
I'm surprised they paid their commissions that early.
Well, I was trying to convince them to pay it. Link it to whether or not the project actually happens, because a lot of people actually then trying to claw back commission off salespeople and all that. But trying to link it into when you actually get paid on the job. Yeah. but it's hard to do that.
It's a contentious one, isn't it?
Because
the
you're trying
payment
to
thing,
get the
is that the salesman's fault?
Exactly. And as far as they're concerned, I've sold it. I've done what you asked me to do.
And what happens if there was a quality problem in the build and they had to discount it to appease the customer? Who pays for that? But if you're not careful, you're giving away all your profit in the commission, all gone.
Enough said.
There's another episode in commissions.
But it's a really tricky one. And
well, the point that McKinsey found in that example I referred to earlier on was exactly this sort of problem. It was an industrial lighting supplier. I think it was in Canada, I read about it. And they went in, it was reasonably low margin business, industrial business to business type stuff, high volume. So the margins, back to our formula before, weren't great, even at gross margin level. But they found that there was a completely lack of control in how the sales guys were allowed to offer discounts, rebates for meeting annual purchases, allowances for certain things, certain things that could be included for free as part of the sales negotiations, which are sometimes hidden. You don't see them as a discount. It's just another line item appears. It doesn't need to be discounted. It's given away. Anyway, they put in all the controls, and apparently their average weighted price only went up by 3.5%. I think it was 3.6% or something.
Right.
And it increased the profits of the company by 51%.
Whoa.
Yeah. So it does, back to our formula, the margin must have been high single digit, which is pretty poor, right, gross margins. But we've worked with caravan retailers before where shifting the metal, the new stuff had 3 or 4% margin on it.
Yeah.
Selling new cars and caravans and things like that, it's very thin, very tight margins. It's all done on the second-hand stuff. That's where you make the money. So that's a really drastic example.
I was quoting, it was Colin, wasn't it, founder?
Remember Colin?
And he always used to say
two ways
to make money. When you buy them, when you sell them.
That's it.
I remember that's the one the other day. I thought, it's funny how you remember these little nuggets from people, isn't it?
Yeah. Yeah, he passed away while we were working for him. Yeah. And from a very rare condition that then my mother-in-law passed away from exactly the same rare condition. Right. Weird, isn't it? So I had a connection. So that was one. The other one I wanted to talk about, and we won't name this one, but insurance companies. Now, we've come a bit too close for comfort, haven't we, to a few insurance companies? Well, I say close for comfort, not because we made claims. Yeah. I stressed you out. But we know a few, and it's a very difficult market. Very difficult to win customers, isn't it? It's one of those things that nobody really wants to talk about. Yeah. Even when we organise our insurance, it's a bit of an annoyance. Yeah. And we know one sad example, don't we, where a business went bust because it had some clause in the insurance they hadn't appreciated. But the story I wanted to tell here was more about an acquisition of an insurance firm. You know what I'm talking about. And just to show you, this isn't so much about, this isn't a story about how elastic the pricing is when someone takes out new insurance or switches company. It's how sticky people are when they've got an existing relationship. And this acquirer, who shall remain nameless because I didn't like their business practices at all, well, nor did the selling firm either when they realised what was happening. But they calculated that the market within insurance companies for people who are pretty stable is so sticky that they could afford to put the prices up on the premium high enough that even though they would lose lots of customers, they would still pay back the money that they paid for the business and make something on it within 2 or 3 years. Yeah. It's crazy. Now it's another gross margin example, because with insurance, you don't see the full increase in what you pay, because most of what you pay is for the underwriting, the insurance product itself. The broker is just putting a margin on the top, right? And that may be whatever it is. I don't know how their business model works, but say it's 10%. They could put 10% onto the total. You only see a 10% increase in the price. They've doubled 10 out of that 20, that total amount. They've doubled their amount of profit. Yeah, unbelievable. So quite incredible model, really, that you've got to look at not just how you price new work, but you've got to be careful here not to distinguish and differentiate too much between new customers and existing customers, but don't underestimate the not so much the tolerance, that's another point though,
isn't it? You've got, I think I was trying to do the exercise the other day, just going through what are all the different, you can end up with a lot of different people on different rates and different terms and different, trying to standardise across everybody. Yeah. It's quite, is it risky? I don't know.
Well, if you're not careful, you end up with a very long tail of SKUs, SKU tail, SKU. And we've got this at the moment, haven't we? As HubSpot 2 years ago moved their pricing model over to a new thing, they've still got some people on the old one as they're gradually getting the tail end of those moving through. And now in the wind, they're talking about another pricing model coming up in the future. And I guess it's a reflection of the whole SaaS industry. The software industry is using different models and evolving all the time. But it takes a long time to shift 500,000 customers across to a new model.
I think you've got a lot of incumbents who can come in and do something. I mean, you could vibe code a CRM, quote unquote,
that's what
very quickly and start putting some crazy new pricing model on it. Just because you're so agile. If you've got a lot of legacy
customers,
headlines,
doesn't it? I think that's why the HubSpot and Salesforce and others, their share prices are all tanked, isn't it? Because people are worried that you can just you could vibe code your way through to a CRM.
Never going to happen.
I don't think people have succeeded yet, but
you might succeed in rare cases where you've got a lot of engineers on your team. I think what spooked everybody was that ChatGPT did it, didn't they?
Did they?
But so we've got the world's best computer scientists, data analysts, and engineers working in a company that made an AI-enabled CRM. Right? Okay, go and find me a company that can do that with a spreadsheet, let alone coding relational databases and AI and all the other stuff.
If you've got the sort of brains in your organisation that OpenAI have got.
Well, and if you've got those brains, don't put them to use making a CRM, please.
You're going to solve a world problem. Go solve hunger or war.
Go do something useful.
Get a Mars.
Just get a HubSpot license and then just fix a problem.
Crazy.
I'll tell you, going to Mars, going to Venus, Star City. Have you seen Star City?
No, I've not seen
Star City. I told you about that.
Yeah, I better write that down.
Apple series.
Star City.
It's a Russian-based cosmonauts, but they all speak in English. But they all speak in their normal accents.
English. Who was the actor?
Griff Rhys-Jones.
Speaking in his normal accent.
Speaking his normal accent. Great series though. Highly recommend it to anyone out there on Apple. I
downloaded a series to watch on the plane last week, and I'd left my AirPods at work, so I couldn't use those. So I bought myself some wired ones. And I'd forgotten how inconvenient they are, actually, if it's wires around. Anyway, they stopped working, so that was a waste of 24 quid on Sony. If they're listening, I'll take a replacement through the post. Thank you very much. So anyway, a couple of things to... So we talked about the signs that you're not charging enough.
Yeah.
You never lose, you're too busy, not make profit, blah, blah, blah. The controls you need to put in place, your discounts and all that, understanding the formula, price increase divided by gross margin is your profit increase, all that sort of thing. Some examples. If you are this, and maybe just a short moment here on combating requests for discounts. So if the customer asks you to drop the price or say, look, that's a bit of above my budget, don't just change your price, because it just looks as if you've made it up in the first place, right? Or that you're completely uncaring about what margin you take out of that business. And as we said earlier, the discount thing is just the opposite of the profit increase thing. You could be losing half your profit just by taking 10% off, which the customer thinks is minor, shaving, but you just lost the will to do the job. So never change the price without changing something else as well.
Never give out for now, as they were saying.
Never give out for now. Where'd you pick that one up from?
That was from an ACE session.
Academy of
Chief Executives.
Wow.
Where there was a guy that was talking on negotiation.
Never give out for
and
now.
He said, never give out
That's
for now.
stuck with you, isn't it?
That has stuck with me.
Okay, there's a few good speakers on that one. Here's one of them. So what sort of out for now examples have you got then? If someone pushes you to have a price decrease?
Well, I think there's things like terms. Like how long was the contract duration?
Yeah.
Scope, clearly. Do you start taking things out?
Yeah, what's our first port of call? It's probably scope, which is one of those two, actually, isn't it? We either say, if you want to pay less, what should we not do then? Or if you still want to do it all, will you just commit to working with us for longer?
Yeah.
It won't cost you any more per month, but we're around for longer and we'll do other stuff.
Yep.
And that's of value. We've talked before about business valuation.
Yeah, business valuation.
You could do faster payment terms. I'm not sure how much companies really value that. I suppose if you were borrowing money to fund what you were doing, or you had very hungry private equity owners that saddle you with debt.
Who's doing the work?
Who's doing the work?
So who's doing the work? So if someone wanted to challenge some of the work, you could say...
Oh, that was a question. I don't know. Who's doing the work?
Someone better be.
Pull back the curtain and say, no one's doing any work.
But yeah, you could say, okay, well, if we need to, like for a legal example,
yeah,
do you want a partner doing it? Or you could have someone who's maybe not a partner.
Yeah, someone with a lower hourly rate or whatever.
So,
Yeah, there's that triangle, isn't there, that I think tradesmen talk about. You can have any two out of cheap, quick, and right,
Yeah.
but you can't have all three.
Yeah.
Yeah, that's a good one. And then the resistance to the bespoking. You know, if you want something standard, we can give you something standard. But if you want it to be tailored to what you need, then there's energy required for us to do that.
Yeah.
And I think almost without exception, customers are very understanding of the fact that you need to earn a fair return for your effort.
I think as well, a lot of people go into this saying, like, who doesn't want something completely bespoke to them?
Because we're all unique.
Because everybody wants,
Yeah.
I just want it to be like this, and we're all special and all that. And yet, when you push back and say, okay, but that is going to cost a lot more because it's going to require more senior people to think about it, to do this, but a lot of more skills, etc. Yeah. Okay, well, how much do you really need it bespoke?
Yeah. Well, you're qualifying then, aren't you? Either you really do want it.
And there's almost that bit of back and forth on it, isn't it? Which is just natural, because all of us would say, if you could have any car, you'd be like that Simpsons, isn't it, when Homer gets to design a car and he just makes that absolute monstrosity that's got like it just bankrupts his brother's company, his long lost brother who owned this mad, and he puts Homer in charge of product design, and he just comes up with a car that he thinks everyone wants, and it's like $100,000 and it just looks atrocious. But yeah, we all would want to do that, wouldn't we? If we're given free reign.
We need to turn our entire wisdom of the podcast into a Simpsons-based episode. Very good. The other thing I think I want to close on as well is the measurement of some of the stuff you can do, however you do it, whether you're working in spreadsheets or using HubSpot or whatever, then at least know what your win rate is and how it varies according to your price, the size of the contract, who you're competing against, what sort of buyer persona you're working with, all that sort of stuff. Because you can't possibly you wouldn't run a factory that had technical input to it without understanding this sort of stuff. Yeah. And that's what we're doing. We're playing with fire, in effect, with the pricing, if we don't understand the real impact of what we're doing. You can't just throw away, I'll give you 10% off that, or I'm going to try a 20% higher price without understanding what impact that has. And lose some low margin work may be a successful thing to do. So,
yep, indeed.
Don't be busy and unprofitable. Something's wrong.
You need that analysis almost customer by customer, don't you?
Yeah.
Where are we?
Try it. Okay, thank you for that.
That's good.
Very good. There you go. Another one in the can.
The price was right.
Or Bully's bullseye, or whatever it was you went thinking of. You have to think about what you had for breakfast. Thank you very much for listening to another episode of the SME Growth Podcast. If you think that was useful and someone in your team might benefit from having a little prod to think about their pricing, then please send them a link to the episode or just tell them that we're here. You can always tell people just to Google for SME Growth Podcast and they'll find us like magic. And in the meantime, good luck with your business.